Namaste once again, teachers.
Namaste, ma'am.
Okay, so today's session, I think it's going to be the one that you people wanted. It's going to be on national income accounting. So very quickly, can you just tell me what are the various ways in which national income accounting can be done?
Ma'am, three methods are there. Product method, income method, and expenditure method.
Okay, right. What is the logic behind these three methods?
The three methods will give same result.
It depends upon the circular flow of income.
Okay, yeah, it is absolutely based on the circular flow of income. Just 1 second. Yeah, now I think I'll be able to share my screen properly. So it is based on, what are the three phases? What are the three phases?
Production, distribution, and disposition.
Okay, generation,
Yeah.
distribution, and disposition, isn't it? Yeah. So generation, what is going to be generated? Income is going to be generated. Also the products and services, they are going to be generated, right? Then the income, factor income that is generated is going to be distributed among the factors, because the factors have contributed towards the production process. So factors, as they receive their income, they are going to dispose it off. That is how the income keeps flowing. So on that logic only, we have the three methods of measuring national income. Right. Now, quickly, can we just look into, can you tell me, rather, I think that would be better, value of the output or value added? What should be taken into account?
Value added.
Value added. Why
Okay.
value added has to be taken into account as domestic product or national product?
Because we should not consider the intermediate consumptions. Only the final products of should be considered.
The value added of all the firms should be considered as domestic product or national product, and not that of intermediate, and not that of value of the output, right? If we consider value of the output, what happens?
Overproduction, multiple counting problem.
Multiple or double counting. That's the app name. They call it as double counting, or multiple times we end up counting the national product or domestic product. So that leads to overestimation, isn't it? So the idea is to simply aggregate all the value added of all the production units. So for that, we need to be proficient with terms like value of the output and intermediate consumption, because it's a difference between the value of the output and the intermediate consumption that's going to give us a value added, right? So value of the output can be calculated ideally as equal to sale, right? But then all the time that does not happen. Sometimes based on the market price, yeah, there would be a small portion kept as stock. The market price is not going to be very good, then the entire production will not be sold. So that is when there is going to be some amount of stock that is kept by the seller. So value of the output can be calculated as sales plus change in stock, right? Also in a nation like ours, what happens? A huge rural sector is there, and most of the farmers, they are small producers, subsistence producers, marginal farmers. So they produce for their own consumption, and the produce might not come up to the market at all, isn't it? So that is the best method to calculate value of the output in economies like ours is the last one, the third one that's mentioned in the slide, sales plus change in stock plus production for self-consumption. Yeah, right. Now, what about intermediate consumption? How will you evaluate intermediate consumption? And what are the, no, before that, what are the further components of sales? How can sales be calculated in multiple ways?
Price into quantity.
Okay, price into quantity, that's one way. Then if we are clear with these, fundamental terminologies, then no way that we are going to go wrong in calculation or in true or false questions and so on, isn't it? Again, when children also ask for doubts, we can quickly clarify the doubts. What other ways are there to calculate sales? Output into price is one method. That's what Jayanti ma'am is saying. Then what other methods are there? Sales is a comprehensive word, right? Sales could be done to so many stakeholders, isn't it? It can be done to the consumer households, it can be done to other firms, it can be done to the government, can be done to rest of the world, right? So sales can be broken up into all these categories, right? So look at that. The first method, that's what Jayanti ma'am was telling, Q into P, value of the output into the price at which the product is going to be sold. So that would be value of sales. Then further components are sales to households, sales to firms, sales to government, plus of course, sale to rest of the world, which is exports. Okay. Sometimes the components, finer components like sale to household, firm, government, all that can be combined and it can be denoted as domestic sales also, right? So where does this come from again? This comes from our 4 sectors in the circle of flow, right? The household sector, firm sector, government sector, and rest of the world sector, right? So all that put together will make up the total sale. So the moment children see the word sales, they should know that it includes sale to all the categories. It's a comprehensive word. Along with the word sale, they need not add anything else. For instance, in a sum, if first item is mentioned as sale, and then the 4th item is mentioned as sale to government, right? They need not go again and add sale to government because that sale already includes sale to government also, isn't it? So this is sales. Then what about intermediate consumption? What are the various finer components of intermediate consumption? Yeah, teachers. What is intermediate consumption? That is for the production process.
Raw materials.
Okay, the firm is going to buy 2 things. One is a factor
Fixed
inputs.
capital. Okay.
One is a factor inputs. The other one is a non-factor inputs.
Hmm.
Why am I breaking it up like this? Because in this particular method, it is always only the purchase of non-factor inputs. It is only the purchase of non-factor inputs that is going to be considered. Because factor inputs, what are they? There are 4 factors of production, right? Land, labor, capital, and organization. That is already there in your income method. That aggregation of that is what is your income method, correct? So under the value added of the product method, what we are going to consider as part of intermediate consumption of firms is going to be only the purchase of non-factor inputs. Are we clear with that? Right? So how else can we say? These intermediate goods, they are used up completely by the firms in the process of production. So what are such items? It can be raw materials, it can be power, it can be transportation, it can be any of those requirements which is going to facilitate the process of production, which is going to help the producer in the process of production. Now, where can that be done from? From again 2 places. That can be done from within the domestic territory. Sometimes not all the inputs are available locally, isn't it? So along with the domestic purchase of raw materials, sometimes there's also a possibility of importing the inputs. right? Import of the non-factor inputs will also be added along with the domestic purchase of raw materials. So that would give the intermediate consumption expenditure undertaken by the firm. And so the word of caution is that factor inputs not treated under this method. Why? What's the logic that I just gave you? Why are factor inputs not treated?
Already it is included in the NAS income method.
Income method. So this is the value added method, right? And why we don't treat this purchase of machinery? What is this purchase of machinery? What is machinery?
Fixed capital.
Capital good.
So see, land, labor, capital, isn't it? So that capital we are not considering in this method. We said that already. Just that further clarification we are making it here, right? So purchase of machinery and purchase of other factor inputs is not treated under this method. So what are we going to treat? We are only going to treat all the items of intermediate consumption nature. That is to produce the output, whatever raw materials and other inputs like what I said, transportation, power, communication, expenditure, all that will be included under this method, right? So then the difference between the value of the output and the value added will give us the value of the output and the intermediate consumption will give us the value added, right? So that's what I'm showing here. Value added will be value of the output less intermediate consumption. So this one, value added, what aggregate will that be? What national income aggregate will that be?
GDP at market price.
GDP at market price, right? Gross value added at market price, right? Or it would be the GDP MP. So why is it the GDP MP? Why is it the GDP MP? What are we going to talk about? What is this method otherwise called as? See, these are the other names. It is called as a product method, inventory method, net output method, industrial origin method, commodity service method, and so on. So each one of this has, some kind of relevance here. When we say the product method, we are trying to find out the value of all the final products. Where? At the market price, isn't it? Whatever value added by all the production units and how it is sold at the market price. So naturally, it has to be the GVA MP, isn't it? Okay, now from there, further treatment can be done to arrive at the NNPFC or the NDPFC. So what are the steps involved there? The primary, secondary, and tertiary sectors, they'll have to be identified first, because summing up the value added of all these sectors will only give us the GVA MP or the GDP MP. Then you need to treat for depreciation and NIT, also for the NFIA, so that we arrive at the NNPFC or the national income, right? So this is the methodology for this particular method. Now moving on, it is there in one of the textbooks. This is not tested till now, but then we never know. This could be tested any time in the future also. It's not there in many of the textbooks. It is there in Agarwala. I don't know how many of you have referred to Agarwala. How many of you have referred to Agarwala already? No?
No, ma'am.
No, okay. So maybe you can just make a note of this particular concept. Generally, what we teach the children in class is the gross value added at market price, and from there, how to arrive at the domestic product and national product. That is what we teach, isn't it? This concept is the concept of gross value added at factor cost, and gross value added at basic price, right? So the GVA at factor cost will be the gross value added by the firm at the factory level, right? Now we know the difference between factor cost and market price is nothing but difference between FC and
Indirect tax and subsidies.
IT and subsidy, or NIT.
NIT.
And net
NIT,
indirect tax.
yes, NIT. So that NIT, you know, we have taught it as just one component. This slide shows you that there could be two components to that indirect tax. Fine, not all the indirect taxes are similar. See, it's a unified tax. Nowadays, it's become a unified tax, isn't it? Earlier on, there used to be varieties of taxes like excise and entertainment tax and sales tax and so on and so on. Nowadays, it's just the GST, right? Yeah.
Yes, ma'am.
So here, what Agarwala has done is identified two kinds of indirect taxes, right? And in between the factor cost and the market price, there is one concept called the basic price at which the GVA is calculated. So GVA at factor cost plus the net production taxes will give you the GVA at basic prices. So what is this production tax? The word itself should tell you that for the purpose of production, there are certain requirements. For instance, you would want to have a huge building or some kind of setup where you can have your installations or machineries and you can start up with a production, right? And for renting or hiring this particular land, or let's say very large firms or medium-sized firms, they even end up owning it, fine? So they need to pay a tax on the land, right? Or if they are going to get the land registered in the company name, then there is going to be a registration fee for the land, right? So the land revenue, the land registration fee, now these are all going to be one-time payment, correct? These are all going to be one-time payment. Same way, we know that the government also gives quite a number of subsidies to the production units, isn't it? If the industry is going to be set up in the remote area, the government will give a tax holiday or a subsidy and probably even write off the taxes. That is the exact word is tax holiday, isn't it? Tax holiday, or there is going to be some kind of a special treatment given to them. So that would make up the production subsidy. Let's say if the business firms, the private firms are willing to start up in the listed backward areas, they need not pay the registration fee for buying the land in that area. That they will be saving up so much, isn't it? So that's an example probably for a production subsidy. So the difference between such a production tax and production subsidy is what is a net production tax. Now that is not going to be in relation to the value of the output, that is the number of units of output, right? That is not going to be with relevance to the number of units of output that is produced. It's a one-time lump sum payment and receipt. Okay, so that is the net production taxes. All right. Then once you arrive at this GVA at basic price, next step is to arrive at the GVA at the market price. For that, you need to consider the product taxes and the product subsidies. So what are these? These are our normal indirect taxes that are levied on the products. Fine. Same way, the subsidy that is enjoyed by the production unit. Yeah, that would be based on the volume of output. So based on the unit of output or unit of production, this will vary. The taxes and the subsidy will vary. And difference between such a product tax and product subsidy is what is a net product tax. So what do we have now? We have two as part of indirect taxes. One is a net production tax. The other one is a net product tax. So then product tax plus the net production tax will make up the NIT or the net indirect taxes. Are we clear?
Ma'am,
Right.
is this applicable even today after the introduction of GST?
I think it's there, ma'am. I think
Okay.
it's there. It's
Okay.
there. Fine. So GVA at the factor cost, GVA at the factor cost plus the basic price plus market price, whatever it is. I think in case you want to teach it, you teach it. Otherwise, this is just for us to know. Sometimes, you know, what happens in textbooks. In textbooks, they give this term product tax or production tax, right? In some textbooks, in some sums, they introduce these terms. So now we should be clear as to what it is, isn't it? So I always, you know, towards the end, I introduce this topic and I just explain this to the children. But till now, it has not been tested. It is just there available in one textbook. Fine. But if we are coming across this term product taxes and production taxes, then let's just not be stumped with that word. Okay. So that is a factor cost, basic price and market price concept. Okay. Then we will move on to income method. The income method, there should be no confusion. It is one simple thing, but there are so many small examples that are normally given as compensation of employees. Right? As compensation of employees, what are the finer components?
Wages, salaries,
Wages and salary. What else, sir?
and triple S, ma'am. Social security scheme contributed by employer.
Okay, okay, okay. Some years back, the finer components were tested and treated. Okay, nowadays it is just mentioned in a go in the textbook. But again, you have understood from the recent exam, value added method, they have, you know, come out with very fine components. They have also tested all kinds of numericals in the past. So they want to do something new. So the finer components, they end up testing, isn't it? So for that sake, we should know what is part of COE, what is part of operating surplus, and what will be part of the mixed income of the self-employed, right? So I have some examples. So maybe we would go on to that. Okay. Yeah. So this is for the output method. So we are together, we will try for the income method and expenditure method. I've got the input for you there. Maybe if you have a pencil there and a notebook, quickly you can take 5 minutes time and tell me how these items are to be treated in the output method. Yes.
Sales will be included, ma'am.
Sales of the output in the market will be included. Yes.
Purchase of new building, it's an capital formation. Is it, ma'am? No.
In the output method.
Okay, output method, right.
Isn't it? In the output method, that is the thing. Sale of output in the market, yes, as you're saying, it would be included, right? Yes. What about the next one?
Yes, ma'am, new building included.
How, where, as what? See, look at the heading. I'm telling you, this is the item to be treated in the output method or in the product method. What are we going to treat in the product method? Are we going to treat the purchase of a new building? What purchases will be treated in this particular method? That's why I started elaborating. Huh?
It should
Purchase
be
of?
treated, na ma'am.
No. It will not be treated. Purchase of new building, why will you treat it under output method? What purchases will be treated?
Oh, okay. Okay.
Intermediate consumption items, isn't it? Purchase of raw material, yes. Yeah, purchase of other things, yes. Building, new building is what? Is that not a fixed asset?
Hmm.
That's
Yes,
not
ma'am.
an intermediate consumption item, isn't it?
Yes, ma'am.
So no, purchase of new building will not be treated. So you will write a reason there saying that purchase of new building by the business firm, it is a capital formation and it will not be treated under the output method. As you pointed out, this could be treated under which method?
Expenditure.
Expenditure method as part of the gross business fixed investment. As part of gross business fixed investment, this particular item will be treated, but not here, not under the output method, isn't it? Okay, then procurement of output by the government.
Yes.
Yes, just now we saw the final components,
Sales to the
households,
government.
to the farm, and then to the government. So yes, this will be treated. Okay, then output used by the owner.
Yes. Self-consumption.
This is production for self-consumption. Right. Then expenditure on running and maintenance of the factory.
Yes, depreciation. Depreciation cost.
This could be depreciation. So what should be done? It could be even intermediate expenditure, no?
Okay, ma'am.
Intermediate consumption, maintenance of the factory. It can be intermediate consumption expenditure. So you're going to
Deduct it.
deducted. It's going to be deducted, right? Yeah. Even if it's going to be depreciation, to arrive at NDP or NNP, you need to deduct it. So always remember to mention the treatment, right? It is not whether a yes or a no. You'll have to say what is that particular item and what is the treatment that we are doing, whether we are going to reduce it or whether we are going to add it, what treatment we are doing to the particular item should be mentioned there. All right. Then expenditure on running. Okay, that's what we saw, I guess. Then next one, production subsidies from the government.
Negative impact subsidies.
Will it be negative?
GDP.
Huh? Production subsidies from the government. To arrive at the NDPFC or to arrive at NNPFC, what is to be done? What are these subsidies first off?
Yes. So from market price to factor cost, if we are going, so we have to deduct subsidy and add, deduct indirect tax and add subsidy. So it has to be added.
It has to be added, isn't it? See,
Yes.
even if you get confused with the formula, think of the logic behind it. Production subsidy from the government. Why is the government giving the subsidy? The government is giving the subsidy. It might not give subsidy to all the units. It might be giving the subsidy to some firms which is not able to control the cost of production, right? They are suffering because of very high cost of production. Maybe the factor cost is very, very high. In order to support such firms, the government is going to give, because they want these firms or production units to continue on to produce. So they want to share part of this factor cost, right? So this production subsidy is very much part of the factor cost. Okay. So you will always add it. You will always add it to arrive at the factor cost. Remember it that way.
Okay, ma'am.
Okay. So this has to be treated in the sense this has to be added. From market price to arrive at the factor cost, this has to be added.
Added.
Right. Then rent of the land.
No, it is factor input, so it is not to be considered.
Yes. So that is a factor input. Rent is added in which method?
Income method.
Income method.
Income method. So here it has got no business. So here it will not be treated. Right. Then export of output to Europe.
Sales to abroad.
This will be sale to rest of the world. So this has to be added. Right. But then you will have to write a word of caution there saying if already sale is given, if total sale is given, then separately this need not be added. Only when there is going to be domestic sale given, along with the domestic sale, this will be added to arrive at the total sale. Okay, always ask the children to give that word of caution there. Then payment of fees to legal consultancy service.
Intermediate.
This will be intermediate
intermediate.
consumption. So it will be
Deducted.
deducted, right? One firm is going to have some legal issues. So if it is going to hire some legal consultancy services from some other firm, it will have to pay legal consultancy service fee. So that would be the service fee for business sake. So that will become intermediate consumption expenditure for this particular firm. So it has to be deducted, right? So that would be intermediate consumption expenditure and that has to be deducted, right? So I think simultaneously we will just, what is this? Sale of the output? Yeah, that I don't think the reason you need to write. Purchase of new building, no. What is the reason?
Of land will be input, factor input.
Yeah, it is a factor input.
Hmm.
Procurement of government, that will be part of total sales, right? Output used by the owner, what is that?
Self-consumption.
That will be self-consumption, right? And then expenditure on running and maintenance of the factory. So that would be intermediate consumption.
Intermediate consumption.
Or in some books, that's also given as depreciation.
Depreciation.
Production subsidies from the government, what is that?
Factor.
Yes,
Cost.
that is a factor cost, right? It is given to the firm so that the firm will be able to control the factor cost. Rent of the land,
Factor input.
that is a factor input. In this method, we will be considering only the non-factor inputs. Export of output to Europe.
Sales to foreign.
Okay, so that will be sale to rest of the world. So that will be added. Then in case total sale is not given, then you need to add it. Payment of fee, this will be again intermediate consumption expenditure. Sale of land.
Again factor cost. So no factor input, so it is not added.
Okay, one more
Fixed
thing.
factor.
Yeah, one more thing that you're supposed to mention here, since it is land, you'll have to say that it would be a transfer actually, not just a fixed factor, right? Because see, you and me cannot create land. Land
Okay.
already exists there. It's nature's gift. Okay. So some land, it is somebody is holding it and then they are buying it and then it's going to be passed on from one person to that of the other.
Okay.
It is not like some man-made product that is going to be freshly produced, isn't it? Land is
Yes, ma'am.
nature's gift. It already exists. And merely the ownership gets transferred from one person to that of the other, right? So that has to be very clearly mentioned there. Not very many books give this. Some books do give this example, right? So sale of land, it's not to be considered in any method because it is nature's gift. Land is nature's gift. And while sales is taking place, there is merely a transfer from one person to that of the other. So we will not consider this anywhere. Okay, right. Then car, mobile phones, laptop given to the workers?
Intermediate.
It will be intermediate consumption
Consumption.
expenditure. Is it so?
Yes, ma'am.
Car, mobile phones, laptop, all these things, when it is going to be given to the workers, you'll have to think of two things. Okay. If it is going to be required for work, then it becomes intermediate consumption expenditure. Get it?
Okay.
Otherwise, what will this be?
Compensation of employees.
Compensation of,
employee.
yes. See, we have payment in kind and payment in cash.
Cash, yes, ma'am.
Isn't
Signed
it?
to this one.
Yeah. So over there. So
So
write
that
these
will
two
come in
things.
income method, ma'am.
Yes.
Okay.
Yes.
Hmm.
So that is why I'm asking you to write over here, since this looks open-ended. So let the children write both the approaches. Let them say if car, mobile phone, laptop, and all these things are compulsory for work. Like remember these items, uniform of nurse and police and defense personnel, all these things, if it's compulsory for their work, that becomes intermediate consumption, isn't it? If it's not compulsory, then what happens? That becomes part of the compensation. Same way, let them write. Okay. Then sale of goods by the government.
Government sector is selling, ma'am.
Yeah.
What are total sales?
No, no, teachers, no. No. Sale of goods by the government. This will be very much part of the GFCE. Under GFCE, this will be deducted. Receipt from sale of goods by the government will be deducted as part of GST. If you look into your textbook, it's very much there. You want me to show that? You have your textbook there. Sandeep Garg, you have it nearby?
Yes, ma'am, I will get it.
You have it? It
Yes,
is very
ma'am,
much
I
there.
have
I will
it.
just try. I think I have the textbook somewhere here. Are you able to see my screen? Yes, isn't it? So under GFCE, it is very much mentioned as, yeah, it is here. I think I have it here. There is a box out there which says that, sale receipt of the government produced products will be deducted. Yes, you have that? You've identified? I'm just trying to move down to that place, that particular page rather. I'm just scrolling. Under expenditure method, there are so many final components that we'll have to know. Okay. Jaita ma'am, you have spotted it?
Trying to find, ma'am.
Okay, here I think I'm almost there. Income method, the next one will be expenditure method. Okay. Yeah, here we go. This is the one. This is the one. Are you able to see this? Let me just probably make this little bigger. Can you see this box?
Yes, ma'am.
See, what does it say?
Yes, ma'am.
Consumption of the government. Yeah, as part of GFC, intermediate consumption of the government, right?
Yes, ma'am. Yes, ma'am.
Plus COE paid by the government. When we say COE paid by the government, what is the COE paid by the government? Can you give examples for that?
PF.
Departmental salaries.
Absolutely, sir. Defense
Okay.
department, police department, for all these departments, the government will be paying salary. Government employees, they're called as government employees or workers, isn't it? Salary that is paid to all these people. Plus, direct purchases from abroad for embassies and consulates located abroad. Right? So what is that? Why are we considering this? Direct purchases from abroad for embassies and consulates located abroad.
Ma'am, come again, ma'am.
It's there, sir. I'm reading the
Not
point.
understand your question, ma'am.
I'm asking you why direct purchases from abroad for embassies and consulates located abroad should be treated here, should be added. What is that?
Ma'am, embassies and consulates are actually the part of the domestic territory.
Okay.
Residents,
So,
ma'am.
am I so?
It's run by the government, isn't it? Indian embassy, wherever it is going to be, Indian foreign consulate, wherever it's going to be run by our government.
Yes.
Correct? So,
Yes.
for instance, Indian embassy that is going to be located in Russia. Not everything for that embassy located there can be taken from here. Whatever requirements for that embassy, they'll have to purchase it there only, isn't it?
Okay.
Who will fund it? Indian government. Correct? Yeah, so that's how it becomes government final consumption expenditure. You get it. For instance, they want even to run their office, their embassy, official consulate, they'll have to have some furniture, some stationery, some kind of laptops, computers, everything they require, right? All the purchases that are made there, it'll be done by whom? Our government, isn't it? Because it belongs to us, correct? So direct purchases from abroad for embassies and consulates that are located. Look at that last line. Minus sales of goods and services produced by general government. What is the general government? General government?
Government.
That part, no. Part of a small part of the entire government is a general government. Basically, it undertakes only the socially productive activities. It does not run for profit, right? For instance, it's there very much there in the same slide on top, right on top. See, it refers the, okay, the term alone is there. General government, it takes on expenditures on various administrative services like defense, law and order. Yeah. So the term general government refers to that part of the government which is going to undertake all those activities which aim to improve upon only the welfare of the population, not the profit. You have government companies, right? They work with a profit motive. But then you have the government health department, the government welfare department, like your police department. You have the government education department. They don't work with a profit motive. They work for the welfare of the people, isn't it? So the government into production activity, the government into welfare activity. That part of the government which is going to provide the welfare activity is what is called as a general government. Yes. So when we say sale of goods and services produced by the general government, what will the general government be selling? What will the general government be selling? Come on.
How can they sell, ma'am? As you told that they are for welfare of the people. So
Public distribution system, ration shop through.
Ration shop. Absolutely, ma'am.
okay.
Super.
Fine.
Also, education, the government schools, they're not completely free. Not everything is free there, isn't it?
Okay.
And one more thing, health services. Medicine and all, are all medicines free? Is all the treatment free? No, right? Not all the treatment is free. Not all the medicines are going to be free. Some of them could be sold at a subsidized rate, isn't it? So that is going to bring some receipt to the government, correct? So we are going to reduce that receipt to arrive at the GFCE, the government final consumption expenditure. We are going to take into consideration the intermediate consumption expenditure of the government, the COE of the government department, okay? And then we are going to reduce the sale receipts of such items. And we are also going to add the direct purchases that is done by the government department for embassies and consulates and so on. All that will make up GFCE. Yes? Okay. See, it's all there in Sandeep Garg. Only thing is, the book does not give us all the information. It's for us to do a little bit more searching and then for us to understand with examples all these things. So it will become easy for us to give it to our children. Okay, so now you tell me, sale of goods by the government, will it be considered under output method?
Method, expenditure method.
Not under output method, but under expenditure method, that will be reduced.
Okay, ma'am.
That will be reduced. Okay, hope that was useful. We'll go on to the next method, income method. Here you look into
Yes,
the
ma'am.
final, yes, these components, you look into it, take 10 minutes or 5 minutes, whatever it is, then together we will discuss.
First one will be yes, ma'am. Wages in cash.
Wages in cash, yes, absolutely.
Yes.
It will be part of compensation of employees. So
Yes, ma'am.
it will be added under income method to arrive at domestic product. Then business tax. Yeah, teachers, business tax. Think of the
Corporate tax, corporate tax.
Super, ma'am, super. So the alternate name is business corporate tax, business tax or corporate tax. Or,
Yes, ma'am.
yes. So it's part of the profit. Since it is part of the profit, part of the operating surplus, this will be added. But already if it is, if the operating surplus is given separately, this will not be added.
Okay.
Right. Then business entertainment allowance reimbursed.
Yes.
No. Mhm.
No.
See, very clearly it is given as business entertainment allowance. Okay, so it's for business sake. Some entertainment, let's say, I can do a lot of drama and all these things, and then for some promotional event conducted by my business firm, they are going to cast me as one of the lead characters, right? And they are going to conduct some shows, right? And they are going to reimburse the money. Fine. So what is that? That is going to be the business intermediate consumption expenditure. Under this method, it will not be treated.
Ma'am, sometimes for some organization, they will be arranging some outings or picnics and all. So those are also coming under entertainment only, right, ma'am?
Yeah,
So
that will be intermediate consumption. For business sake, they're doing it. So under some other method, it's treated, not under this one.
So, ma'am, that can come under compensation of employees.
Which one?
Ma'am, taking them to a business picnic or something for the employees.
That's what Jaita ma'am, what am I saying? What am I saying? It is for business sake, they are doing it, right? So it will be intermediate consumption expenditure of the firm. That is not provided for the worker just because the worker
Okay.
has been being productive for that company or firm or whatsoever. That's not the regular part of the job, isn't it?
Okay, ma'am. Okay, ma'am.
Right?
Okay, ma'am.
That will be business intermediate consumption expenditure. So under output method, that will be deducted.
Okay,
That is
ma'am.
not a factor payment.
Okay, ma'am.
Yes, that's not a factor payment. Okay. Then house rent allowance.
Wages and
Yes.
salaries in kind.
Yes.
Oh, that's not in kind, ma'am. That is part of your wages. only.
Compensation of employee.
Part of compensation. See, if you look into your this one salary breakup, then nowadays many organizations, they are giving only a consolidated pay. But if it's going to be a structured pay packet, this is how it would be. Basic pay plus the dearness allowance plus a city compensatory allowance plus medical allowance plus the house rent allowance and then the leave travel allowance. Like that, various allowances are there. All these allowances put together will be wage and cash or salary. Okay, right?
Yes, ma'am.
Okay, so that's part of the compensation of employees. All right, then dearness allowance, I think I just discussed that. So it will be part of the salary. Okay, then bonus,
Yes.
that will also be part of the annual salary of the worker. Right. Festival gifts,
Yes.
no.
No.
Any gift is a unilateral transfer.
Okay,
Free,
okay,
free,
yes, yes.
transfer, free.
Gift, isn't it? Gift is one-sided. I like you, I gift. I don't like you, I don't gift. Bonus is not like that. It's structured, calculated on as part of my regular basic pay. Annually, it will be given, or biannually, some companies give and so on. But gift is always when I like, don't like. It's just unilateral, one-sided. Okay, not in return for something. It's a transfer. Okay, then uniform, safety shoes, helmet given to the workers.
Compensation of employees.
Just now we were discussing, isn't it? If it's
Yes,
compulsory,
Intermediate consumption.
yeah, if it's compulsory for work, then it becomes intermediate consumption expenditure. See, look at the wordings. They are saying safety shoe, helmet,
So it is compulsory.
mandatory for work. Correct. Okay. So free bus pickup and drop from home. So many companies, IT companies, all these are there. They give a free bus pickup and drop facility. What is that?
Wages and salaries in kind.
That yes, that will be part of the compensation. You can opt for it, you need not opt for it. If you go by the company bus, to some extent, they will pay you a reduced income. Some people say, no, I'll manage my own transportation. You give me that money. Right? So it's very apparent that it is part of the compensation. Right? Then health checkup expenditure reimbursed.
Wages and salaries in kind.
Correct. Because we saw medical allowances are there now. Medical allowances, if they give, okay. Otherwise, you need to produce this. I go to some health center that is listed by my organization. I get all the checkup done, and the receipt, I'm just going to take it and then produce it in my company. They will reimburse the money. That's part of the allowance. Right. Then next is soft furnishing allowances. What is this soft furnishing allowance?
Intermediate consumption. Ma'am.
No, why?
No, this is not compulsory, right, ma'am?
It's not compulsory. Some organizations give it. It's also something done in kind. No, not in kind. As a breakup, they give it. Right? Soft furnishing is all these,
For military person and all, they will be getting, ma'am.
even organizations, they do, ma'am. Some big organizations, they do it.
Okay,
Soft
ma'am.
furnishing will be, if, let's say, for instance, for my house, I want to get a screen for my windows and for my doors, or I want to buy pillows and all these things. So they may give for all this, they may give some allowances, right? It's some companies do give the wage and annual salary in a with a breakup like that. Okay, so it's part of the compensation only. Sodexo or food coupons.
In kind, ma'am, compensation.
Compensation, right? Then distributed share of residual earnings.
Dividends.
That is the dividends. So that will be part of the profit, part of the operating surplus.
surplus.
Then reserves and surplus earnings.
This is undistributed.
Retained earnings,
Retained earnings. It's also called as
Undistributed.
profit.
undistributed
included.
profit, or that's also called as savings of the private corporate. Right. Then income of the own account production.
Fixed income.
Mixed income, yes. So all these will be part of your COE or OS, or the part of your income method, right? Okay, so like this, nowadays they are not giving items for calculation, but then you never know. Any fine morning they may end up with a question paper which has all these components, right? It's for, and none of the books in detail
Yes, ma'am.
give all these things also, right? Okay, then moving on to the next one. Again, take 2 minutes time, think about it, and then we will discuss.
First one will be no.
Household purchase of government bonds.
So
No.
monetary, direct monetary transaction.
It is a transfer, right? It is
Bonds
a
and shares, we are not going to consider.
yes, it is a
Pure
financial
monetary
transfer.
transaction.
No bond, share, all these things, purchase or sale will be considered under any of the method because it's a transfer. Then number 2, expenses incurred in hiring an auditorium for dance concert for a fundraiser by an NGO.
Yes,
Yes, as what?
because from where it is being hired, so they are being paid. So it is then, yeah, so it's, no.
As what? As what are we going to treat this?
Private final consumption.
Yes. So what are the components of private final consumption expenditure? What are the expenditures that we are going to consider as part of PFCE? Yeah, teachers.
Household final consumption expenditure plus private non-profit institutions serving household final consumption expenditure.
Yes, ma'am. Very correct. So the household consumption expenditure on all the final products and services, and the consumption expenditure undertaken by the private not-for-profit organizations. So here the example is fundraiser conducted by an NGO, right? NGO is a non-profit organization, non-governmental organization, and they want to raise fund, and for that they are spending. So that expenditure will be considered as part of PFCE.
Yes, ma'am.
Absolutely right. Then direct purchases made by Indian tourists in Atlanta.
Yes, ma'am, but it is in the form of import.
No,
It's direct
Indian
purchase.
tourists in Atlanta.
it is PFCE only. It is PFC. Under expenditure method, if you go through the components, you will understand that all the direct purchases made by the Indian residents in the foreign territory will be considered as part of private final. I'm going to go to Atlanta for 1 month or 2 months. Okay, there, when I'm going to do the tour, that will be direct purchases made by me, and that will be private final consumption expenditure. That will be added as PFCE, right? Okay. Then purchase of drapes and furniture by Indian consulate in Russia.
Government consumption, ma'am.
GFC, just now we discussed this, isn't it? It will be part of government final consumption expenditure. Right, then bonus to defense department workers.
It will come under compensation of employees, ma'am,
Method, which method?
under
Item.
income method.
No, ma'am. Just now we saw compensation of employee by the government departments will be part of the GFC, isn't it? Intermediate consumption expenditure of the government,
Yes.
and then direct purchases made by the Indian government for the embassies and consulates and all these organizations in rest of the world. Plus, it is going to be the compensation that is done to departmental undertakings minus what? Sale of products.
Goods and services produced by
Minus sale of products by the
General government.
Yes, right. Then sale of accumulated newspapers by households.
second hand sale.
Second hand sale. So
Not included.
no, not included. Not included. The expenditure on not only that, though we say accumulated newspapers, one thing is second hand sale, that word should be there. Also, this is not considered to be stock or sale and all these things done. It's not a production unit, it's only a household unit. Right. Then expenditure on maintenance of building. Expenditure on maintenance of a building.
This will come under depreciation.
This will come as intermediate consumption or depreciation, right? So, under which method? If it's intermediate consumption expenditure, then that will be under
Output method.
output method, not here, not an expenditure method. Then extension of office space by a floor.
A capital formation.
It will be the business capital formation, business investment, right? Okay. So gross domestic, part of gross domestic capital formation, fixed capital formation
The
actually.
capital formation.
Yes, fixed capital formation. New public park built.
Government final consumption expenditure.
No. Where final consumption? Huh? Fixed capital formation, public expenditure, right? Public park, new one, they are building it. So much of investment will get into it, isn't it? So as part of GDKF only, see, as part of the gross domestic capital formation, there are two components. One is investment expenditure, the other one is inventory investment. So under investment, there are three, right? One is the households investment. Household investment will be only the gross residential construction investment. And then firms will be investing in fixed assets. So that will be the firm's fixed investment. And then the government, public expenditure or the fixed investment done by the government, right? So public park build will come under that gross domestic capital formation, very specifically fixed capital formation done by the government, right? Think of it, no, they'll have to acquire land, then they've got to build up such a huge park and put it up there. So much of investment will go in, isn't it? Right. Then expenditure by foreign tourists.
In the form of export.
No. See, just now purchases made by Indian tourists in Atlanta, when we say that's going to be added as part of TFC, then this one will be
Deducted.
deducted. right? This one will be in your expenditure method. It's specifically given. Sandeep Garg, they specifically given a word about this. Then import of wheat and potatoes from Ireland.
This is
Import.
directly
Import.
Government expenditure.
Import of wheat and potatoes from Ireland, this would be deducted since it's an open-ended one. Let's say it's going to be deducted, sir. Right? Since the word import is given, it is going to be deducted. Okay? X minus M. Stock of produce in the warehouse.
inventory.
Hmm? Yeah.
Inventory investment.
It's an inventory, ma'am.
Sir, stock of produce in the warehouse. That's all it says. It doesn't say whether it is change in stock. We'll have to always be careful with that. Stock, we never account for it in any of the methods. We account for only change in stock. Isn't it?
Yes.
Yeah. So encourage the children to write it like that only. Stock will not be part of the domestic income or the national income calculation. But if it is going to be the change in stock or the difference between the closing stock and the opening stock, then that will be part of the calculation. Okay. Right. Then sale of medicines in government hospital.
That GFCE, ma'am,
So that will be
included.
reduced. Sale of medicines in,
Reduced, ma'am, reduced minus.
yes, reduced as part of GFC. Right. Then free power to the farmers.
Subsidy.
Subsidies.
Subsidy, it's a subsidy. Right. Okay. So I think we have got a hang of so many concepts now.